And global traders brace for volatility as they predict tariffs and inflation to significantly influence global markets in 2025. This according to JP Morgan's annual survey of institutional trading customers. We decode these traders' bets on the trends for 2025 in our next report. Take a look.
Post the pandemic, the biggest threat to financial markets and the global economy was inflation. Global central banks started to ease monetary policy late last year after fighting stubbornly high inflation for well over 2 years with aggressive rate hikes. However, inflation is expected to rear its ugly head once again this year, complicating central bank policy path. Indeed, inflation and tariffs were listed by 51% of the over 4,200 respondents in a JP Morgan survey as the main drivers to dominate markets this year. While 27% of institutional traders surveyed last year described inflation as a major worry, that number has since dropped. The markets have been particularly vulnerable this year so far due to US President Donald Trump's threats to impose tariffs on foreign imported goods as well as particular sectors and nations. Many investors view the tariff policy as inflationary. The responses to the survey showed inflation and tariffs took the top spot for the biggest impact on markets in 2025. Geopolitical tensions were the next big bet. Market and economy dislocation worries were the third on the list. US-China relations took the next spot. Although the ongoing tit-for-tat trade barbs pushed investors to increase the chances for this to move markets. However, recession fears among traders decreased to 7% for the year, down from 18% in 2024. The most common response when asked about the biggest challenge in 2025 was volatility, which was also a worry in 2024. While just 28% of people cited it in the 2024 poll, 41% said it was the biggest worry for this year. Eddie Wen, global head of digital markets at JP Morgan, said, "What distinguishes this year is somewhat unexpected timing of volatility." He added, unlike in the past when volatility was tied to scheduled events like elections for non-farm payroll data, we're seeing more sudden fluctuations in response to news headlines around the administration's plans, leading to knee-jerk reactions in the marketplace. Concerns around liquidity, regulatory shifts, the cost and accessibility of market data topped the list of market structure issues raised by traders in the survey. Business Bureau, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.